Property sentiment collapses. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I have my stein of coffee and I thought we'd have a look at the latest NAB residential property survey from Q2 2020. Now it should be no surprise to a lot of people that have been following the news that property sentiment probably is very appropriate, is in the gutter. It has collapsed. Now before we go through this, I'll just jump to this chart there. The housing market sentiment collapses and there you go. A negative 33%, negative 33 on this index. Look at that dive, guys. What do you think? What do you think? Confidence isn't looking that well. We've looked at, multitude of articles, one after the other. Every single city here in Australia, all the capital cities are taking hits to their unit rentals. That's the first move. And remember, this is during the beginning of a recession. We haven't technically we haven't officially entered recession yet. We haven't had 2 quarters of negative growth. And there's still government life support on so many parts of the economy. So, NAB Residential Property Survey. Let's have a look at this. The pandemic impact on the economy causes sentiment in the housing market to collapse in Q2, with confidence also falling to record lows. New research shows the biggest impacts on housing markets going forward to come from rising unemployment and job security, consumer confidence. NAB economists still see falls in property prices of around 10 to 15% over the next year or so. So, how are people still advocating for a V-shaped recovery? Are they still doing it? You've got the property spookers, and what I'm starting to realize is a lot of them, and a lot of these articles that we're looking at, they will highlight particular things. They'll get cherry pick one or two, or they'll find a property well in the upper quartile that sold for quite high above reserve, and use that to create some buzz, some positivity. And every article is, rental prices have fallen, but we're seeing signs of recovery. Agents think that there's a sign of recovery. There's always a bloody sign of recovery. So, let's look at the survey highlights. Housing market sentiment collapsed in Q2, with NAB Residential Property Index falling to a survey low of negative 33 points, plus 31 in Q1. All states turned down sharply, but the impact was biggest in Victoria and New South Wales, where prices and rents are expected to fall most in the next 12 months. And here's the thing, with these surveys, it's to do with the sentiment. So they'll survey people, ask a series of questions, and if more people are negative Nancy's, you get a negative number. And if more people are, positive spruikers, you have a positive number. So it generally is a gauge of just the sentiment and how the market will respond. So more people are bearish right now. More people are worried. But it's such a big decline. New and established housing markets are being supported by owner-occupiers, but higher activity from foreign buyers was also reported in Q2, especially in new property markets in Victoria. Employment security is now the overwhelming impediment for buyers of existing property, with new research also revealing the biggest impact to the housing market going forward would likely come from rising unemployment, job uncertainty, and consumer confidence, according to around 8 in 10 surveyed property experts. The view from NAB. We have not changed our view on property prices. We expect the impact of the pandemic downturn will see a decline in prices of around 10 to 15% from peak to trough. While prices have held up slightly better than expected, they have now declined for 2 consecutive months across the capitals, and we expect this to continue for some time yet. This easing in prices in Sydney and Melbourne comes after a very strong period in growth from mid-2019, where prices troughed. With the initial pandemic-related restrictions on housing activity eased, the economy has undergone a very large contraction, and while we appear to have passed the trough in activity, it will take time for the recovery to unfold. The labour market fallout and consequential impact on households will continue to play out over an extended period, which will likely see ongoing government support. There you go. am I just naive to think that people are going to come out of this with an appreciation that they need to be more self-reliant and build up more of a reserve? Do you think I'm being naive in hoping that everyone... Is it my early morning coffees that I'm... to record these videos, I get up early, and before I eat, I have my caffeine injection. These shines are each half a liter, so... Do you think I'm being naive there? People just hope for government support moving forward. So here we have the NAB Residential Property Index, viewed from property experts, and so that's higher in this quarter. So index by state, Victoria down 50, New South Wales 47, Queensland down 6, SANT down 26, down 8 in WA, 33 overall. And the NAB economists, there you go, down everywhere. So the biggest impact on housing markets going forward, I'll zoom in so we can see that. 80% rising unemployment uncertainty, consumer confidence in general 76%, difficulty in consumers accessing finance 60%, end of government support JobKeeper and JobSeeker at 60%, so I thought that would have been a bit higher. Lower migration of 48%. Increased supply of rentals as short-term rentals 20%. Increased demand for lifestyle properties, sea change, tree change 20%. Downward pressure on construction activity from lower demand, 18%. Reduced demand for apartments and inner city dwellings due to increased working from home, 17%. Don't know another. So we're seeing a whole lot of issues here that we've been discussing in this channel for some time that other people are concerned will have an impact on property. So the housing market sentiment collapses. Housing market sentiment, measured by NAB's Residential Property Index, collapsed in the June quarter as the effects of the pandemic weighed heavily on the economy, employment, business, and consumer confidence. Overall, the index fell to a survey low of negative 33 points after posting a small gain in quarter one, up 4 points to plus 38, which predated much of the economic disruption of the pandemic. So that quarter one, so predated the disruption. And now we're seeing reality hit. All states have been impacted, but the downturn in sentiment has been more severe in some states than others. It fell most in Victoria, down 95 points to a record low negative 50. Negative 50. I still remember reading some of these articles and people going, oh, Melbourne's different. Melbourne property will always be good. Sentiment's not saying that, is it? I guess it takes some people will some people wake up and realize what the risks are with property? Nothing is risk-free. No investment is risk-free. And it was the lowest of all states, having led the country in the previous quarter. Steep falls were also recorded in New South Wales, down 84 points in the survey to Queensland down 45 points to an equal survey low negative 9. SANT fell more moderately, down 33 to the state's lowest since quarter 4 2015. In WA, the state index also fell quite sharply, down 48 points to negative 8. But it was highest of all states. Okay, so WA has the highest residential property sentiment of all states. Who would have thought? Who would have thought, hey? You know what it is. It's the $45,000 or $40,000 in government fund money they're giving out to people in WA. Do you think that affected this result, everyone? Do you think that affected it? I bet it did. So that's just the sugar rush that WA is experiencing from that government handout. That can't last. Sentiment is also well above the low seen through much of 15-17, when the mining investment boom ended, leaving an oversupply of housing built up during the boom that caused prices to collapse. And here we go. And make sure you can see this. This is the residential property by state. And there we have it. Boom. What does that tell you, everyone? WA is the highest, everyone. I'm still surprised. As expected, overall housing market confidence based on future expectations for price and rents also fell heavily, particularly the short-term measure. The NAB Residential Property Index is now expected to fall steeply to a survey low of negative 11 points in the next 12 months, from a plus 43 forecast in Queensland. Wow, in quarter one. Well, they got that good. They got that right, didn't they? The fall in long-term confidence was more moderate and remains positive at plus 22 points in 2 years' time, from a plus 49 forecast in Q1. Interestingly, longer-term confidence levels are higher than during the most recent housing market downturn, when the fall in national dwelling values started to accelerate. This may reflect an expectation among property experts that the pandemic-led housing market slowdown may be short-lived. What do you think about that, guys? Let me know in the comments. Do you think it will be short-lived? Do you trust the property experts, who only months ago, some of them were probably saying it'll be fine? Near-term confidence levels slipped in all states, but overall confidence was mainly driven into negative territory by Victoria, down 79 points to negative 30, New South Wales down 58 points, SANT down 50 points, where confidence level in all three states have now fallen to new survey lows. Yeah, it's taken a hit. Confidence levels in Queensland also fell down heavily, 33 points, but we're still positive. So Queenslanders are still positive. I don't know why. In WA, however, confidence moderated by a more sedate 17 points to plus 33, with property professionals by far the most confidence about market conditions in their home state in the next 12 months, because the government is just throwing money on it. They're getting bucket loads of petrol and pouring it onto the housing fire bubble, or overinflating the housing bubble. That's it. They're putting helium. They're attaching helium to the balloons. Now hydrogen, it'll blow up. So, I mean, there you go. Long-term confidence, 2 years' time, has also fallen, particularly in Victoria, where the index posted its first negative since the survey began, down 52 points to -1. So that's that's not a very negative sentiment, but the fact that it's the first time it's happened since this survey began, I think that's telling, isn't it? Confidence was also notably lower in SANT, but remained positive, and New South Wales. Long-term confidence eased a little in Queensland, was basically unchanged in WA. It remained. WA is the highest of all states, so yeah, what do you think? It has to be that, the stimulus. So survey house price expectations. As the country continues to grapple with the pandemic and uncertainty around the economy remains heightened, property professionals have revised down their expectations for house prices. In the June quarter, the average survey expectation for house prices now sees national house prices falling 2% over the next 12 months, after predicting a rise of 1.5% in the previous survey. So, well, yeah, they buggered that up, didn't they? I mean, this is the problem with these predictions. It's all these uncertainties. So next 1 year, everything down 2%, then next 2 years down 0.1 overall. So there you go. House price expectations in the next 1 year, everything down. Everything down. Property professionals have also revised down their expectations for price growth in all states, with prices now expected to fall across the country. House prices are expected to fall most in Victoria, now -3% versus a 1.5% increase. So that's nearly 300% less, or 3 times negative. There you go. I mean, they were only off a little bit. New South Wales now down 2.5 from 1.9. SANT down 2.2 versus 0.1. More modest falls were predicted in WA, 1.1 now versus 0.1, and Queensland 0.7 now versus 1.3 forecast. So they predicted everything to go up, and now everything's going down. Everything's going down. This is why I don't think we're going to see the impact of all of this until next year. And now, even though with the banks extending stuff out longer, how's that going to affect the bank's share price? How is that going to affect their valuation? I mean, now we can see why they've set aside so much money for these costs. They're going to drag it out because they don't want to see property fall. They can't. And this is why today is the last day for people to make submissions in for the changes to the Banking Act to restrict deposit accounts explicitly from bail-in. So if you have, make your submissions, or at the very least, let the party and the politicians that are taking the time to put this forward, let them know you appreciate the work they've done. Can't hurt. The long-term outlook is more positive, with prices remaining basically flat in 2 years' time. However, this masks very different expectations across states. Property professionals in Victoria remain the most pessimistic, with house prices expected to fall 1.1% in 2 years' time, compared to a 2% increase predicted in Q1. Prices in SA and NT also tipped to fall a further 0.7%. While New South Wales, the market is expected to be basically flat, 0.2 now versus a 3.1% increase. In contrast, the downturn in prices is expected to be short-lived in both WA and Queensland, with property experts in both states pointing to a resumption in growth, with prices 1.4 and 0.8% higher in each state respectively, although projected outcomes remain weaker than previously predicted in other quarters. I mean, there you go. Look at what they had us predicted. Every single prediction now they've revised. So, I mean, let me know, do people make financial decisions based on these predictions to buy and what these property experts are saying? I'm sure they do. Now that's all out the window. If this is all changed. Oh, yeah, you made a financial decision based on this percent growth. Now you're actually going to lose this percent. Remember when they were saying in some of these other articles, get in now, as a first home buyer with the grant. And this, if you lose 10% value, you've only lost the grant that you got for free. There were actually some experts saying that. It's insane. But you gotta do what you gotta do. I don't understand it. I just sit here drinking my coffee. I mean, I'm at the perspective, if we take a hit to our property value, it's kind of, I didn't do anything for the property to go up. It's a bit of a joke. When you say, oh, wow, we made this much on the property in a year. Oh, we did absolutely nothing. It seems like bullshit. and once I experienced that, I realized, wait a minute, all these experts that are talking out their arse like they're geniuses, some of them just got lucky. Bought at the right time. Survey rental expectations. Property experts have also revised down the outlook for rents. Nationwide, the average survey expectation is for rents now to fall 0.5% over the next 12 months and grow by a slower 1.1% in 2 years' time. There you go. Again, opinions vary widely across states. Property professionals in New South Wales and Victoria are by far the most pessimistic, with rents now expected to fall 1.5% in New South Wales and negative 1.3% in Victoria. 1.6% forecast. Yep. The outlook in WA, however, remains very positive. Wow. Really? Come on, Western Australians, tell me what's going on here. Why is it positive? Why? If anything, shouldn't rents take a bigger hit in WA because there's going to be more people now that are going to be jumping onto the new home bandwagon? They're funny money is getting thrown at them. Buy. They're all going buying houses. Wouldn't that mean rents will go down? Can you even travel to WA yet from Queensland? Rents in that state are expected to go 2.3% and significantly exceed house price, suggesting yields should widen. Property experts in Queensland see rents rising 0.5%. Well, it's not what we're seeing in some of the videos that we'll bring out today, guys. The outlook for rents in 2 years remains highest by some margin and unchanged in WA, followed by Queensland. SANT. Property professionals also see modest rental growth in New South Wales, with rents expected to remain static in Victoria. We'll see how that goes. I mean, these predictions in 2 years' time, I think, are completely worthless. To be brutally honest, there's so many unknowns. There's so many, things that could affect the economy here in Australia. There's so many, foreign affair issues. International trade could take a hit. Relations with China could deteriorate even more. International tourism may not return. So, yeah, good luck with those predictions. So, new property developments. Here we go. First home buyers remain the most active participants in new property markets and those that have got the least experience with it. In Q2, the market share of first home buyer owner occupiers reached a new survey height of 36.5%. The market share of first home buyer investors fell to a 6.5-year low at 8.5%. In total, first home buyers accounted for 45.1% of all sales in this market. First home buyer owner occupiers were most active in WA, where they've got the 40 grand, and least active in Queensland. First home buyer investors leading the way in Queensland and lowest in Victoria. So here we go. We can see owner occupiers. Look at that climb. Look at that climb, everyone. Boom. Boom. So owner occupiers net of first home buyers accounted for 33% of all sales in quarter 2, up from 30% in quarter 1. These buyers were most active in South Australia, Northern Territory and Queensland at 44%, and least active in Victoria. Despite record low interest rates, the market share of residential investors in the market tumbled to a survey low of 12.6%. So the investors, and we're seeing this again and again, they're stepping back from the market, guys. They're stepping back. I wonder why. Maybe some of these investments aren't looking as appealing anymore. Maybe they're waiting to see. Maybe they're more experienced than first home owners, first home buyers. I imagine first home buyers, and I've been a first home buyer, are going to be more emotionally invested in getting into the property market, more likely to make irrational decisions. Could that be what we're seeing here? Investors were most active in Queensland and SA. Foreign buying activity, however, increased to 8.3% of total sales, but remained below the survey average of 10%. So foreign buyers are up, but they're still below. Foreign buying accounted for a much bigger share of the market in Victoria, its highest level in 3 years. In other key states, market share fell to just 2.5% in New South Wales, 6.4% in Queensland, 1.7% in WA. Well, there you go. Expected change in share of new property buyers. So increase, decrease. Foreign buyers down. Look at that, everyone. Australian investors down. First home buyer investors down. First home buyer owner occupiers are up. Owner occupiers up. Australian investors up. For quarter 1. Everything quarter 2 down. So there you go. Property professionals were asked if they thought the share of new property buyers would increase or decrease over the next 12 months in each buyer segment. In net terms, the number who said the share of first home buyer owner occupiers would increase outweighed those expecting them to decrease, but the net balance fell to plus 33% in quarter 2. The net number expected the share of first home buyer investors in the market to fall, however, outweighed those experiencing an increase of negative 17%, a reversal in expectations from quarter 1. Slightly fewer property professionals also expected the net number of owner occupiers to increase than decrease. In net terms, more property professionals, however, now expect the market share of local investors in the market to decrease than increase, after more predicted their numbers would rise in the last survey. We also note a significant jump in the net number of property experts expecting the market share of foreign buyers in the market to fall over the next year. So new housing market constraints. Tight credit is still the biggest constraint for new housing development in the country. It is also the biggest constraint in New South Wales and considered a very significant constraint, and in WA and Victoria, but considered only a significant constraint in both states. So constraints on new housing development. What do we have here? Rising interest rates. Yeah, well, not significant. Very significant is tight credit. And then we've got housing affordability. Then you've got this, the sustainability of housing price gains. Then lack of development sites. Labor availability. Yeah. So it's tight credit. Constraints on new housing developments in each state. So what do we have here? The most significant in New South Wales is tight credit. And then SANT is sustainability of house price gains. Queensland, where are we? We're highest, probably matched for affordability and gains. WA, tight credit. Housing affordability was the next biggest market constraint, but amid widespread expectations for slowing house prices and continued low interest rates, its impact was moderated in quarter 2. The impact on markets was biggest in Queensland, SANT, and smallest in WA. Construction costs were identified as the next biggest market constraint, led by Victoria, Queensland, SA, and NT. What do you think, everyone? Well, construction costs are pretty high. The sustainability of house price gains was highlighted by noticeably more property professionals in South Australia NT, while a lack of development sites remained most problematic in New South Wales. The overall level of concern over labour availability eased further, but remained somewhat higher in Victoria, Queensland, and New South Wales relative to other states. With interest rates now at record lows and widely tipped to remain low for some time, the impact on the market from rising interest rates is not a very significant concern, according to property experts in all states. Well, is anyone anticipating that interest rates are going to increase in the foreseeable future? Can they increase rates? What would happen now if they increased rates by 1%? what would happen to consumer confidence? Are we falling into the trap like the States, where they tried to lift rates up to normalized rates? What happened? Couldn't do it. Can we get out of this trap here in Australia? So established property. In established housing markets, buying activity continues to be dominated by owner-occupiers, net of first home buyers. And their overall market share ticked up noticeably in quarter 2 to 46.5%. Owner-occupiers accounted for the lion's share of total sales in all states, with market shares highest in SANT and WA, and lowest in New South Wales, Victoria and Queensland. So we can see here. The share of first home buyer owner-occupiers in this market in quarter 2 fell to 22.4%, from a survey high of 27 in quarter 1, but remains well above the average of 20%. These buyers were most prevalent in Victoria, New South Wales and WA, least prevalent in South Australia and Queensland. The market share of first home buyer investors in the market also fell to a low of 8.4% during the quarter. So these are the rent investors, 9.7% in quarter 1. They were most active in Queensland, New South Wales, SA and Victoria. In total, the market share of first home buyers fell to 32.3% from a survey height of 36.9% in quarter 1, led by New South Wales and WA. Well, that's interesting because we're seeing some argue that first home buyers are, jumping in. Maybe they're starting to back off, or maybe it's just the search results that they're jumping in. Someone mentioned in the comments, I'm literally sitting here, sitting here on Domain looking at properties, and I've got no intention of buying. It's just our property obsession, isn't it? I like looking at the stuff overseas, the American stuff no, I don't like looking at it. I hate seeing it, but thinking, oh, bloody hell, I could sell him and buy a mansion. That's the scary thing. Local investors account for 16.7% of all sales in quarter 2. Property professionals estimated these buyers account for between 19.4% of all sales in Queensland to just 11.7% in WA. The share of foreign buyers in established housing markets, however, increased a little to below the average of 3.1%. Market share in this buy segment was highest in Victoria, lowest in WA, with market share below averages in all states. While expectations around market share in new property markets changed considerably in all buyer categories, they were less obvious in established markets. Overall, the net number expecting the share of first home buyer owner-occupiers and owner-occupiers to increase was broadly unchanged. No change is also expected in the market share of first home buyer investors, but the net number expecting the share of local investors in the market to raise was pared back to 15. The net number expecting the share of foreign buyers to decrease fell from 36 to 30%. So established housing market constraints. Amid rapidly rising unemployment and job uncertainty, unemployment security is now the overwhelming impediment for buyers of existing property and is now considered a very significant constraint. There you go. Employment security. People are worried about keeping their jobs. It is also the biggest constraint in all states and a very significant constraint in all states bar South Australia and New South Wales. Access to credit is next, but property experts again mark down its impact on the market relative to the last survey, with continued concern falling to its lowest level since early 2018. However, access to credit was highlighted as a bigger constraint in New South Wales and Queensland and rated lowest by property professionals in Victoria. Well, this just shows you what people are worried about. It's employment security. I mean, look at that there. Look at that. People are worried about losing their jobs. Understandably, with what's happening. We've just entered a recession. There's a first recession that we've had in living memory of a lot of people. So you've got the constraints here. Lack of stock has now overtaken price levels as the next biggest impediment in the market. Lack of stock and price levels were identified as the biggest market constraint by property professionals in Victoria and Queensland than in any other states. So, I think that has to depend on the specific area down at the suburb level that you're looking at. I can't imagine there's a lack of stock of apartments in South Brisbane. You just drive there and you can see them. There are developers who are paying the first year of your mortgage for you. Essentially, they're giving you a discount on the property and they're dressing it up as paying for your mortgage in South Brisbane. That, to me, screams desperation. Smart marketing, though. Brilliant marketing. Quite impressed, but not a sign of confidence. Overall, rising interest rates are currently not a very significant impediment in the market in all states bar Queensland and Victoria, where it is somewhat significant. Really? Foreign buyers. While the prominent role played by foreigners in Australian housing market has dissipated in recent years, market share in this buyer group in Q2 increased in both new and established housing markets. In new property markets, their overall market share increased to a 2-year high of 8.3% and to 3.1% in established housing markets from a survey low of 2.1 in Q1. But buying activity is still below survey average levels in both markets. So foreign buyers are coming back, but nowhere near the average. In new property markets, the share of sales to foreign buyers jumped noticeably in Victoria to an above average of 19.3% and has continued the rising trend seen in the past 3 surveys. Market share of foreign buyers in new property markets fell in all other states. It fell to 2.5% in New South Wales, 6.4% in Queensland, and 1.7% in WA. In established housing markets, foreign buyers accounted for a larger share of sales in Victoria, New South Wales, and Queensland, but a smaller share in WA. The share of foreign buyers, however, remained below survey levels in all states. So, what factors do you believe have the biggest impact on housing market? So these are the specific survey questions. Biggest impact on housing market going forward. Let's have a look here. We can just look at this chart. Rising unemployment, there you go, is the highest in South Australia. Consumer confidence, WA. Well, let's see. In Victoria, the biggest impact on housing market for them is lower migration. Pardon? What? No, wait a minute. That's the lowest one. Why is that in red? Oh, wait a minute. Victoria. Okay, there we go. I'm getting it there. I've had my coffee. Okay, so Victoria, rising unemployment and job security is the biggest problem of all of the states in South Australia, but they're all pretty high. Consumer confidence in general is Western Australia. That's at 84%, but look at all the others, all above 70. End of government support, JobKeeper and JobSeeker. So Queenslanders and West Australians don't really care as much. It's a big problem in New South Wales. Difficulty in consumers accessing finance. The New South Walesians are most worried about that. South Australia, they're not really. Victoria, it's pretty high. Low migration, that's going to have an impact on Victoria. It's the highest one of all of the states. Increased supply of rentals. Not as big as we thought, biggest in WA. Increased demand for lifestyle properties, WA and South Australia. Downward pressure on construction activity, Queensland. And then you've got reduced demand for inner city apartments. So there we go. So NAB's view on house prices. We'll skip to this. Our expectation for house prices over the next 18 months is broadly unchanged. We continue to expect house prices to decline by 10 to 15% in this episode. While the impact of the pandemic has not been as dramatic as first expected, prices appear to have now turned. This comes after very strong growth in Melbourne and Sydney over the past year or so. Prices have declined in each of the past 2 months, according to the CoreLogic 8 Capital City Index. Melbourne, which turned a month earlier, Perth and Sydney, which have seen largest declines. Outcomes across the other capitals have been mixed over the past couple of months, with a small decline in Brisbane, a small rise in Adelaide, and a slightly larger rise in Hobart. So here you go. We expect the declines to be led by Sydney and Melbourne, but we also expect falls, albeit smaller, across other capitals. Notably, Perth will again decline after having shown signs of stabilising. While all forecasts are highly uncertain at this point and will be heavily dependent on the virus outcomes, it is unlikely any part of the country will escape a deterioration in the labour market and the resulting fallout for households. Slower population growth. With lower international migration, as well as increased supply in the high-rise segments, will also weigh on prices, particularly in the larger centres. Low rates will be a general support, but are likely to be offset by higher unemployment and weaker income growth. That said, we also anticipate a large fall in construction, which will see a more rapid stabilisation in prices than otherwise. With approvals at low levels, it will take some time for construction to recover. So in the longer run, the balance between recovering migration and the turn in construction will be important for prices. The impact of the global pandemic on the domestic economy has been significant. While official data for quarter 2 capturing the peak impact of containment measures will not be released until September, the quarter 1 national accounts showed a significant impact on growth even at an early stage. The higher frequency labour market data shows a major impact, with the unemployment rate having risen by almost 2 points in 2 months. If not for the measurement impact of JobKeeper and JobSeeker policies, the unemployment rate would have risen to over 11% and hours worked have fallen by around 10%, representing a very large downturn in labour market conditions. Consistent with significant deterioration in the labour market, our business survey, as well as transaction-based data, also showed that a very sharp decline occurred in quarter 2. However, these measures have come off their low as restrictions have eased. That said, both business conditions and confidence remain very weak. While rental sales have recovered, other sectors of consumer spending have been much more subdued. This, combined with the likely gradual recovery in the labour market and some ongoing impact of closed international borders, will see a gradual recovery in the level of economic activity. We expect that consumption growth will remain soft beyond a quarter 3 rebound, as dwelling investment and business investment continues to fall. Government spending will likely remain a key support, with the government increasing spending on infrastructure as well as in other low-performing sectors of the economy to support growth. More broadly, both fiscal and monetary policy makers will continue to provide support to the economy, while the unprecedented support provided by the government will likely be wound back in the coming months. We expect support to continue in one form or another. That could be a more targeted form of JobKeeper and the retention of a higher unemployment benefits somewhat between New Start and JobSeeker levels. On the interest rate front, we expect the cash rate to remain unchanged for an extended period, with inflation pressures unlikely to build for some time and a long way back towards full employment. The RBA will keep the exceptionally easy stance of monetary policy in place. Indeed, mortgage rates are at very low levels. The focus will also continue to be on the flow of credit to the areas which need it. But beyond that, it appears that monetary policy has run its course for now, and we see very little chance of a move to negative rates anytime soon. So there you go. So the NAB hedonic dwellings price forecasts. And there you have it, everyone. There you have it, prepared by Alan Oster, the group chief economist from NAB. What do you think? Sorry, it's a bit of a long one, but I thought it was worth going through in detail, just to see what all the predictions are and where they will lie. It's interesting to see that everything's changed, and it's been significant changes to predictions. Everything is declining. Everyone's predictions of positive growth, only slight growth, has been revised significantly. And look at that residential property index fall. We'll have to wait and see what happens. I suspect this is only the beginning. This is only the beginning of this recession that we're having. 10 to 15% falls. What do you think, everyone? As always, please let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support this content, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy our merch from HeiseSays. You can support us using PayPal, GoldPass, or via PayPal, which I already said. Take care, everyone. Have a great day. I'll see you in the next video.